Yo, mic check, mic check. I don't even know if anyone's gonna be with me today, but this is a makeup session. I missed the London Open for you guys, so we thought, well, let's try and see if we can do something and see how the New York opens. It is Friday, right? And another end to a beautiful week in the markets. So it's been quite a fun week. Even if you take a break, say it's still fine. Right. So I'm just quickly posting this onto our public Telegram group. I see Trevor wrote something there in the public Telegram group saying if I take a break, it's fine. So you guys will rock with me on Sunday. Appreciate that. Right. So I don't know who's gonna be around, but if not, what I'm gonna do is I'm just gonna quickly scan. I haven't been able to trade intraday setups anyways today. I have actually not even been able to have a look at my accounts. You know, at all. I've just been, stuck in the rut. But interestingly enough, I'm at play. This is surprising. So I see AUD USD. We've been tagged. Those of you who are inside the signal service, we've been tagged. These are all pending orders that we set up a while back. Surprisingly enough, I'm not that excited about it. I don't know if AUD USD is going to do well. So please just be mindful of what I'm saying. It's in profits right now. You're better off, monitoring it. If you see price failing to create PCPs, then you most likely want to get out PCPs to the downside or break even. I really hope those of you who follow our signals get to watch this on time so that you can make up a decision. I'm seeing this for the first time. I didn't even know I was tagged. But right now we're all in blue profits. The other signal that I'm in right now is EURUSD. Like once again, these are very old. Oh, this is yesterday's buy signal. Is that right? Looks like yesterday I wanted to buy, and that was supposed to be yesterday's trade idea. I have not looked at the markets today. Part of me feels like it's probably not a good idea to be in that, right? So we'll have a look at these things, today, and then see what to do. But it is the New York session. It is the New York session, right? So that massive rally, Euro USD rally, all the Euro rallies that we were in about 2 days ago, or was it yesterday? Seemingly are coming to an end. I'm about to share my screen. Don't worry. All right. Hey, Samuel. Samuel, I've got a special job for you, by the way. I just keep forgetting to inbox you. It's nothing special. It's actually I've got a favor to ask, rather favor to ask. Yeah, right. But good to see you, man. Good to see everyone. Right. So we'll see what to do. But once again, AUD USD is the main swing trade. Sales been triggered. Check if you're triggered, and then we'll investigate if it's still a good idea to have it. The euro run that we're riding upon 2 days ago when I bought euro USD seems to have come to an end, and that's the only way we're triggered in EURUSD, right? Because price broke to the downside. USD moves to a new high as Waller speaks, another Fed chair governor. He's part of that FOMC stuff. So dollar is strong, euro is falling. That's why EURUSD has been triggered, and that's why I don't feel great about the trade. Once again, 365. Don't say I didn't tell you. All right, we are triggered in AUD USD. I am not excited about the trade idea. But if dollar is strong right now, of course, this would work in our favor against AUD USD. The question is where do we want to get out? Do we see this working out, etc., etc.? Right. So it's somewhere in this supply here on the daily time frame. This is the candlestick of today where price is moving. So you can see markets removed what was a lower level. If price is to fall, if this is the beginning of a swing trade that we anticipated sometime in January, right? Remember, we've been waiting for a lot of these big term swing trades. Then let's see how far price could fall, right? Right now, there was a pivot point down here. I'm not that excited about it, but it could be a good place to exit, right? If you're gonna rock with price. But if you're rocking with price, just know a couple of things. The supply is broken, right? Markets did go out of their way to remove the supply here. See that there? Markets took this out. And that's really because there's a supply on top of a supply type of thing, right? So this is what your area of value really looks like, right? It comes with some type of risk limitations. So just be mindful of that, right? There was a very deep touch close to that white line that I really wanted. And then markets did drop, and then markets are coming back now. So hopefully we get a good run out of this. Personally, I would like to de-risk my account. I actually don't even want to be triggered in a lot of those original pending orders until I review them. I just haven't had a chance to review them because a lot of things have changed since the war. EURUSD, I don't think that buy is going to do us any good, ladies and gentlemen. If anything, the EURUSD buy from yesterday's morning live session being triggered today will cost us money. So I'm already closing EURUSD. I'm closing in profits. There we go. I'm out of EURUSD. And that's just because today is a down day for euro. So we wanted to buy, euro yesterday, but the breakout happened before price could come down to the level. Remember, as an intraday trader, you're looking for open in the morning, close at the end of the day. All right. So you really want to make sure all your pending orders for intraday are fresh. Fresh in terms of areas of value for sure, but also fresh, more importantly, in terms of perspective, right? So you really are looking into this thing. So yesterday, where's this chart now? Where did we work on EURUSD? Is it here? This is the 1 hour. Right, so let's go to the 1 hour time frame. So I know we wanted to buy, but we wanted to buy somewhere here. Markets didn't do that. Markets dropped lower, right? And markets broke out here without us. So let me show you what the play was yesterday. When we last spoke. I'm going to remove all of this. And then I'm going to put in the 1 hour mark for yesterday, the 17th. I'm going to put in the 1 hour mark for this morning, had we been there live. Right, and I'm going to remove this. So yesterday, when markets opened, price was somewhere here. When markets opened yesterday, 9 a.m., when we had our live session, price was there. And then I say to you, what you want price to do is to break market structure, which it did, right? Take this out, right? And price broke market structure only at 6 p.m. yesterday. But what we wanted was a clean break, and then immediately after the break, a quick return on the same trading day to this particular area of value, a trading session, sorry, during the London session. By the time price came back to that particular area of value to do something like this, right, it was already like 10 p.m. last night, and then markets failed to make new highs, right, confirmation of change of character, and then price went down to the downside, right? So that's why I am no longer interested in buying, even though, yes, it's a good demand area, blah, blah, blah. Remember, all these places are broken on the daily. On the smaller time frames, they look very valid, but on the big picture, I don't think there's going to be a lot of buying activity. And even if there is, I don't want any piece of it. So I've deleted, or not deleted, I've closed in very tiny profits EURUSD buy as price was sitting here. But I do believe we're going to see a further break to the downside, right? So what a trade idea for next week for intraday traders, you want to start coming back to these levels, depending on what's going on an intraday basis, like what's going on with price. Why is price now, diddling back, etc., etc. But let's work through this thing, systematically, like we always do. I'm so ready. Bring it on. Fantastic, Samuel. Right. So, guys, it's the New York session. It's different from the London session. You're right. You've got most of your traders waking up right now. It's 9:15 in New York. All right. It's 3:15 in South Africa. Probably 4:15 in Kenya. I have no idea who else is watching. Right. So your traders, your morning traders, your American traders are trading, and it's lunchtime right now in London. Right. So just want you to understand the flow of money. Right. So and when the London traders show up at their desk at 2 o'clock to continue executing order flows, it will now be an hour into the New York session, and the first 3 hours of every trading activity for smaller time frame traders, for intraday traders, right? You're looking at in America it would be 9 to 12. In Africa it would be basically 3 p.m. to 6 p.m. These times are absolutely crucial, right? Institutions are piling orders based on the previous session. All right. Now, in the morning in the London session, what I like to do is to look at very euro-friendly things to trade, stuff that will affect Bank of London, so the pound, the euro, ECB, and a lot of euro pairs. Fundamentally because, well, it's the London session, right? But during the New York session, which is what we normally do as senior traders, although my Fridays are reserved for therapy and golf, and I can't do both today because my therapist is she's traveling today, and ain't nobody want to play golf with me. So I'm working today, but check this out. Look, so you want to look at indices like Nasdaq, right? During the New York session, you can trade them during the London session as well. They're actually easier in pre-market times, by the way. There's less competition. You have to think about it that way, right? Less traders. This whole gang just woke up. This whole gang was not awake at 9 a.m. when you're trading Nasdaq, right? So there was just one flow direction of money. Right now, American traders are going to be competing with global traders, right? So there's going to be more competition. Futures market, less competition most of the time. For some reason, I now struggle. It's almost as if TradeView wants to change this thing to take 100. Before they do that, they take forever. Well, and they do show it to me, but I prefer it on a specific broker. So all the way down there, right? There we go. So this is Nasdaq. I sent this in the private Telegram group. I marked it up for you guys yesterday. I've deleted what I did in the private Telegram group last night, just showing you guys how the session played out. Bearing in mind the day before that with the FOMC. So this was the FOMC during the Nasdaq thing. And then since then, markets rallied up, markets created a sell place, markets sold, and then markets broke through, right? We saw this much more clearly on the 15 minutes time frame in the private Telegram group when we were talking about this yesterday, when markets created this bearish engulfing at about 9:15 a.m. yesterday, and then markets during the opening right now of the New York session yesterday sold everything, right? Sold through a clean 100 and something points. And if you're a risk taker, I was not part of the buy. The sell definitely I took, but not the buy. I didn't like the buy due to multiple touches, but clearly it helped. So if you're a good risk taker, this was a good buy, right? So markets then bought through this level at about 6 p.m. last night. I was already done for the day, and they've rallied on. So what we want to do now is to just assess where price is today. Right. So this is how markets close. Then this is the Asian markets, right? Consolidating, bringing a low, and then finally getting to the supply that I'd marked up, right? This is the Asian open at midnight. And just before the day started today, at 8:45, just before the London session, markets started to kind of like rotate into that zone and then have been choppily selling off. Right. So this is kind of like your markets, right? You've got a lot of competition now, but this is your market, right? So in this 1 hour sessions during the week, I look at a handful of assets, not everything, just a handful. And because it's the New York session, we're definitely going to start off with, and let me just write this down so that those of you who want to stay. If you just so you get a clear picture, I'm going to have a look at the DXY first. And then I'm going to look at USD CAD because there's a massive correlation between DXY and USD CAD. I'm going to look for an inverse correlation. So I'm going to look at something like EURUSD, right, to do the opposite. And then after that, I'm going to have fun with things like USDJPY, etc., etc. I personally don't think I'll take an intraday trade with you this afternoon. It is Friday. Most of my intraday trades, I do them in the morning during the London session. But I will be walking out some zones, which we might see play out at least end of day today, if not Monday next week, right? These are all short time frame zones. So we got DXY, USD CAD, EURUSD, and then USDJPY. And then if there's time, we can then add a couple of other things. I mean, I think it's worth looking at AUD USD since us swing traders are already been forcefully triggered in it. I should have deleted that pin in order a long time ago. And then because it's the New York session, definitely worth looking at gold, right? How gold is doing, right? I think that's more than enough. I mean, we could throw in pound USD, but really, we've done well with that. And then, just for kicks, let's look at the US30, the Dow Jones, or the S&P 500, right? For me, Nasdaq is really, I don't know, boring, man. It's just a cluster. It's just such a heavily retail traded area of asset. I don't find it that exciting, but if I want quick money, for sure, I definitely come here, right? So, but this is the range right now with Nasdaq, right? Nasdaq has two options today. You break the supply, you go higher, or you come back down, right? So let's just touch base with the world, because I've had staff meetings since 8 a.m. Right. So Bullard, this is the guy I always tell you about Bullard. Bullard is a member of the FOMC. He's the only one who voted for 0.50% basis point, right? So St. Louis Fed's Bullard says central bank should raise rates above 3% this year. This is interesting coming from Bullard. Let me show you what this means quickly. So I mean, I hope this helps. Those of you companies, 1 hour sessions, because you guys get like more information all the time, and eventually I'm hoping that it will help you. I know it will for whoever is paying attention, right? So we know that the Fed went up by 0.25 about 48 hours ago. We know that the Fed said there are 6 meetings left, and it said there were 7, but most likely they'll make decisions in the 6, right? There's 7 meetings left. So if they go 0.25 in all 6 meetings till the end of the year, look at that. We're only halfway through what Bullard wants. Bullard wants 3%. So Bullard is saying, look, the Fed needs to get their ish together. Powell needs to be more aggressive. So maybe next meeting, we might get a 0.5, 50%. And in the next meeting, another 0.50%. We're already on 1%, right? I'm just trying to give you a ballpark to see. But right now, it's shocking, in my humble opinion, that when it came down to voting, he was the only one who voted for an aggressive interest rate hike. And so obviously, he lost the vote 9-1. Everyone else voted for 0.25. But that's quite interesting. I have no idea what's going on with the war. I'm kind of tired of seeing Putin's face. Russia seems to have averted its historical bond default for now. I should probably explain the Russia and gold stuff in the war room on Sunday. You guys really need to understand. These guys bought gold from the West consecutively for 10 years for this moment. It's classic. It's just, I know he looks like a madman in the headlines. It looks like this whole thing is not well thought out. Trust me, media. But for the most part, for me, from a financial perspective, I am against the war. I just enjoy it. I enjoy understanding how human beings think and how they react to the finances, right? So I'm not pro-war. I'm just saying it's amazing how it's starting. If you follow the money, it's so amazing how this thing was well thought out, right? It's not just a fight that started this year over NATO. I thoroughly don't believe that. Right, Russia's central bank warns of a large-scale structural transformation for economy and holds rates at 20%, whatever. Here's what Chinese state media is saying, whatever. Reduce speed limits, not a problem, not a problem. Right, so headlines don't matter. Right, now, this is the Euro session. The Euro is currently not doing well today. I don't know why. We'll find out later. Let's look at New York. Right, so our standard indices are kind of doing well. I mean, stock falls, futures fall as S&P 500 tries to notch best week since November 2020. I saw a stupid advert. I did have a little a moaning session on Instagram yesterday, that said they were like, pay 3,000 rands and we'll teach you how to trade Nasdaq. That's been on the rise this whole year. Right, and that's basically baby psychology. A lot of people don't know how to trade, think they make money through buying only. So they don't know that you can trade and sell an asset and still be profitable, because selling to people is negative. People always wonder why they are broke, because the entrepreneurial business mindset is not a thing for most Africans, right? You have to sell to make money. So you can sell in the market and still make money. Long story short, this is so true. S&P 500 has been, for the most part, struggling to break highs since November 2020, right? So you can see it's a bit down, right? But Nasdaq, your VIX, I talked to you guys about the fear gauge index, is still under 30, right? So for the most part, markets will do fairly fine. Energy sector, before we get into charts, right? Oil back up. It was at 97. Now we're back to 102. Brent was at 103 yesterday. We're up 106. I won't even talk about gas. I don't right now. I don't even ever take profit for gas. Natural gas from my last year. I don't know where to exit. I'm trail stopping it, but I just want to see how high this whole thing goes. Right. So for the most part, nothing has changed in the markets. Last time I checked, my Bitcoin was at about 40K. Right, 40,422. So that's not too bad. It's gone down a bit from yesterday, but for the most part, this hasn't really moved much. For the most part, nothing has changed. Right. So let's have a look now at the first thing that we want to understand, the session. Remember, intraday setups, you want to understand the trend of the day, and then you understand the opening of the day, and then you want to start to speculate where best to get your money. Right. So to get the trend of the day, I'm going to start on the daily time frame. Just give me 2 seconds. I must have been teaching yesterday and left all these untidy markings on the screen. Hope everyone is doing well, by the way. I hope everyone's doing well. And just a reminder, I'll be doing an in-depth market overview on Sunday, 4:30 p.m. South African time, what we like to call our traders' war room. So do check that out if this stuff helps you. And while I have your attention, at some point in time, if I do say something that you like in this video, I would appreciate it if you hit that like button. If you have not subscribed, please do subscribe. The analytics to my channel are so interesting. About 40% of people who watch the video consecutively are not yet subscribed. And it's like, but why? I mean, if you enjoy it and you come to it all the time, might as well subscribe, hit the notification button, because I'll be doing very sensitive stuff in April, right? Just to be honest, not this month, but definitely from April. I've got an interesting thing I want to do with a lot of people on the channel. But it'll be fully crypto, right? It'll be a straight crypto segment every single day, right? So check this out, guys. This is the governing supply. Just kind reminder for swing traders, governing supply, where eventually on the 16th of June, when the FOMC made the first decision, they didn't increase the rate, but they spoke about absolutely wanting to increase the rate. The dollar went wild on that news. That's where we bought. We took profit here. All right. They finally increased the rate now, first time in 3 years, about 2 days ago. All right. 0.25 basis points. One finally no longer in zero. Right. And I say we as if I'm in America. Right. So now markets have been banging on heaven's door. Right. I'm struggling to penetrate this governing supply. You can see on the weekly time frame, we have a basin, we've got an engulfment, a retest, a break of it, an entire ugly basin where price took time to leave. If you've done my module 1, you know when price takes time to leave, we don't like that. We don't like that because it weakens the area of value. We want our orders, the flow of money in these zones, to do the job. The job is to push price down, not to consolidate. Any type of consolidation in this level is buying and selling against each other. We want to sell to the retail traders. We want to get them right, and small banks, blah, 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 blah. So eventually there was an imbalance, price did leave, but this level here is very much, heavily, toxic, right? So if I go in here with just looking at the daily time frame, and do something like this, my entire zone would now look like this. If I was to tighten this area of value on the dollar index, right, just to really see where is price. Price right now is over here, these green dotted lines, right? This is where price is today, right? Which tells me that there's still this little peak hump to deal with, which gave out a big imbalance, which is where markets probably have wicked out. So there's probably a weak touch in my white line. I'll double check for you all of this right now. But right now I'm saying there's probably a weak touch in my white line, and it's because reacting to this. After it deals with all the sell orders here, which seem to be where one of the stronger sell orders and the stuff at the top, markets then will take that out, right? I think the dollar can do this before the end of March. I just didn't want to be in the trade anymore because, again, governing supply was in charge. So I could easily be wrong and markets rallied down for a good 2 to 3 weeks. Right, so there we go. Like I said, a wick probably touched the white line. There's the wick, touched the white line, markets fell. Right, so I'm looking at price today. I want to trade today. And today, I'm seeing the makings of what looks like a bullish engulfing candle. Here's the problem. You can't trade off that. The candlestick has not closed. So all you have is the rest of the picture minus today's candlestick. This could end up being a dodgy red candle. This could end up being, a downward, hammer candle. You never know until markets close. I don't think that's going to be the case. I feel like markets will close strong today. But for the most part, we can still say we are in an uptrend, right? For the most part, but we'll see if we are bullish engulfing. But let's say we are. That means price is going to have to start leaving behind clues as to where all the money is stacked. So what I've done now is I've dropped to the H4 time frame. I'm only going to teach on DXY. After that, I'm flying through the course of the charts, right? There was a 1 hour gap in here in that little circle, or 15 minutes gap. I can't remember. But let's start off nice and slow, and then I'll show you the gap. The gap has been filled, but this is a very interesting area for price to come back to. Right, so let's go to normal candlesticks on the H4 time frame. You can see we've got these strong rejection levels here, strong rejection levels here, right? Why? Right, you can see the making of a gap. Why? There's strong buying here. Something had happened in the world to do with the war, and I don't remember what at the time, right? But there were a lot of buyers who came in here, right? So this is a good place for price. You are trying to investigate today's bullish engulfing or the making of today's bullish engulfing, right? You go 2-hour time frame, we're starting to get some super duper clarity, right? We've got an arrow, strong upward buyers movement, which means supplies like this, these lower supplies, nothing's gonna stop price, right? Now, there's nothing you can do now, all right? Look, guys, you can say this is confirmation. You can say it's an uptrend. You can say you are brave, whatever you want to do. But buying here really would require you to have a stop loss all the way down there or somewhere down there. It's wild. It's absolutely wild. What you can do to your own benefit, in my humble opinion, is to wait. You want to wait for price to come back down. Price is very parabolic on the smaller time frames. Price will have to slow down at some point. Inside your waiting, you want to start to be very sure where you think markets could potentially come back. All right, and you want to run with some confirmation setups. You want to see a couple of things. For example, you probably want to buy here. Will price come back here? It's known to. Sometimes it does come back on the same day. Sometimes it doesn't. Sometimes it will come back next week, right? But this is a high probability setup, right? You are guaranteed that if you buy up here, if there is a retracement to me, you're going to lose money. You're also guaranteed that if you do nothing, you won't make money, but you also won't lose money. Right. So for me, option A is always, take a high probability setup. It's still some type of risk, but it's at least a high probability setup. High probability setup confirmations on the 1-hour time frame. We've got a break of market structure, right? Markets are starting to change character. There's still a lot of things. The distribution hasn't fully, happened yet. But for the most part, we can attest to the fact that markets left this level strong at 9 a.m. today during the London session. And it seems to me that markets want to continue with that strength into the New York session. It's very early to tell. Intraday traders, you still need all the orders to be put in. Now, in the H4 time frame, imagine if this is a supply. If this is a supply, you are screwed because you really have a big area of value before you can even see any type of potential buying or confirmation of an uptrend. You are absolutely screwed here. So just be very much, mindful of that. If that's a supply. Now let's look at it a little bit clearer on the 2-hour time frame, which is where we were. You'll get the same thing: a rally basing, long wick up, trying to trigger up all these highs here, and price fell. Right. So for me as a buyer, I can't even begin to buy in here. I actually need price to fill this up by itself. I'm not going to use my money to buy a momentum trade, right? So for me, I'm going to wait. I would wait down there if DXY is still buying today and if it comes back today. If this ends up being triggered on Monday, make sure you double check yourself. This is an intraday play, right? So this is what we're looking at now. It's getting a little bit clearer, all right? For the most part, it seems to me that on the 1-hour time frame, price did break a supply, right, with this very stop loss type of wick. This was the original supply. A few days ago, yesterday, whenever it was on the 16th of March, and markets ripped, a big one, and it fill in the gap here, right? Gap to the downside, completely filled, and then markets have done that, right? If we go at Kinihashi, we can see for ourselves double confirmation. The supply is broken all the way at the top. All these other supplies have been taken out. There's nothing you can do, right? So if you're looking for a buy, then the buy idea is where I've marked, and your take profit destination is probably somewhere here for intraday traders, right? So if you really are serious, or not serious, but if you really want to take the trade, that's what I'm seeing here in this particular market. I would wait to come back down 15 minutes to get a clearer perspective. 15 minutes to get a clearer perspective. Where's the London Open? There we go. London Open was the last time markets based inside that area where I said you should buy. That's why, once again, I'll be looking very much into this area here. Right, it's impossible right now, rather, to draw a Fibonacci. You can't draw a Fibonacci at the moment because markets had not given us a swing high. Markets have given us a swing high, I'd be able to narrow down a retracement. I do believe, though, that in the world of retracement, this might be the chosen place, a zero comma a golden ratio, right? So just be mindful of that markets could stop. I know that if markets are on a touch and go tip in a rush, they will come back to where they broke market structure for a retest. Markets are allowed to do that, especially if they have an order block to facilitate that, and they do there, right? And then markets would also rise. So on the DXY, we've got 3 buying options. What would Leroy do? I'll take the lower ones. I'll take the last 2. I have a pending order here, all right? If I can handle it with a smaller lot size, my stop loss will be outside there. If I can't handle it because of my account size, then the stop loss is outside here, and still another second buy idea buying low there. Right, but if you look very carefully, if markets decide to cross below this area and come here, 9 out of 10 times markets will break through this demand because there's already something lower, which covers anyways the area of value that you are waiting for. So I personally, don't know about you, I'm gonna only want to risk my money somewhere down here personally, right, on the 15 minutes time frame for the dollar. But for the most part, it seems to me that there might be a continuation of a bullish trend, right? And maybe I'm counting my ducks too early by saying price is going to end above. On the 15 minutes time frame, we seem to be in uncharted territory as soon as price arrives up here. As soon as price gets back to that 98 level, we seem to have a fresh supply that might need to some dealing with. So something like this is at play. All right, so that's option 1. Option 2 will be something like this, which is what I would prefer, and I'll buy somewhere there. So that's me on DXY. Good luck, traders. You'll let me know. Pound USD. I saw someone posting pound USD yesterday in the public Telegram group. I think it was some sell scalping trades. There was the scalping, a couple of trades yesterday. The Bank of England Forex Factory. Bank of England increased the interest rates. I think I'd mentioned that in the morning that it was definitely going to happen, right? So the forecast was 0.75. They had just got another interest rate hike in their previous meeting to 0.50. Before that, they were on 0.25. And you can see, right, so the Bank of England is really being aggressive. They really are trying to countermeasure the threat of recession, trying to manage inflation, right? Very different from the American counterparts. But you can see yesterday, right, that we definitely got what the markets wanted. So they're supposed to be bullish for a currency. So why didn't the pound rally yesterday? This is kind of like the questions I always ask myself out loud, in the hopes that people will start to do that, right? So I wrote, be careful here. Those of you who attended the live session of the FOMC, that 8 p.m. night session, I wrote, be careful when I drew this level for you. Be careful. I was talking about this level here. And that's because already markets were reacting too close to the zone where the FOMC was talking. And lo and behold, there was a stop loss rate, liquidity rate, however you want to look at it, yesterday. And then markets fell through like crazy. Now, some of you still today don't understand this, or understand it, but your psychology is so bad that you can't resist temptation, right? So, and what I mean by that is some of you will see a big red candle, while the big red candle is forming, you will immediately tell yourself that Leroy taught you about imbalance and order flows, and so therefore this signals a lot of sellers. The red candle will probably be this big by the time you see it, and because it's this big, your mind, your articulation of your environment, your trading environment, where your senses put together a fake scenario. And the scenario is always this. If I've sat down with a lot of traders, done one-on-ones with them, some students, some people who are not students who pay for one-on-ones, and the psychology is always the same. As soon as this is like this, so I'm saying to you, you'll be looking at this chart like this. This is yesterday, by the way. As soon as you see something like this, and you're seeing it break market structure, and it's just everything in your mind goes crazy. Like your entire mind tells you that you finally found the best sell setup in the history of all histories, and markets are going to move very fast. Sell now. Most people that have fall for this trap open here. They start to sell. They start to open sell positions as soon as they see this big, before the red candle even closes, because their minds have already wired them to believe that the next thing that's going to happen is there's going to be another red candle, and you're already late. You should have caught this. You're already late. Imagine setting on the third red candle, the 1 hour time frame. You'd be so far behind. And that's just a trick of the mind, right? Fundamentally designed and built by poor broker education, but also, it's just a human characteristics. When price does this, remember I say don't sell when price comes back up here, because I didn't trust it, and there was a stop loss sweep. So believe you me, you would have lost money, right? Now that you've got a bearish engulfing pattern and it's strong and it doesn't make sense, that's what I like about it. Pound is supposed to be strong. Yesterday at about 2 p.m. Everything came out that the exchange rate was gonna go up. So look what markets did. Look at at 2 o'clock. As soon as that was, this is to me anticipation, right? Why didn't markets pivot here? There is no demand. So these are retail traders. So retail traders across the world knew. I mean, I told you in the London session, right? If you know markets and fundamentals, you know that the exchange rate is going to go up. So what is this? This is what pricing in looks like. Everybody starts to buy into this thing. Who is buying here? Ain't no ways you're going to tell me smart money is buying there, right? When there are all these beautiful lows down there, when they're bearish engulfing patterns here, and smart money comes back into them, nobody bought above the white line who classifies themselves as a smart trader. Nobody would have even done that as they move towards a supply. No one. It's just retail traders literally who start to pile on buys in here. And they are doing that because the fundamentals are correct. Interest rate is going to go up. So if I buy now, listen to this logic. If I start buying now here, what's going to happen? I'm going to buy in early, which is I'm going to make all this money. And when the interest rate comes out, I'm also going to make more money because price is going to go up. That's the psychology. You want me to prove it? Let's prove it. Real quick, let's draw a horizontal ray there. Let me show you the market positioning of where these orders were printed, right? So that's my white line of break of market structure. But let's just put two horizontal lines and let's just scroll back. Right, look at this. If you're a retail trader and there are billions and millions of them taught this area is a resistance. It was flipped into a support just a few hours before the news comes out that it is now time for pound to get an interest rate hike. So buy now, retail traders, all right? So on the same zone that they use many times, once here, there was a lot of resistance there. Markets fell back. Let's scroll back. I'm on the 1 hour time frame. I'll find two more examples and I'm going to call it quits because of time. I don't want to waste too much time here. But I think that's a classic example already, right? So historically, I wouldn't count these levels. They're too far off. Man, we have to scroll all the way back to to Kingdom Come, right? But you guys, I'm hoping you guys get the gist. Oh, just tighten the screen. I really hope you guys get the gist that this area of value where the purple lines have been used so many times. Look at that. 1, 2, 3. All these as supports. So when markets yesterday got ready for that, right? Retail traders, money there, blah, blah, blah. Markets went in there. We spoke about this 2 days before. And I told you guys, be careful of this level. Don't trust it for a second, right? Anyway, where retail traders are going to trade, smart money is going to use that for a smart reason, right? So there we go. So all you have to do, and back to my point, I see this all the time in my one-on-ones. If you get a clean signal like this, first of all, you're in shell shock because you're like, why didn't the pound go up if the interest rate was approved high? Markets price in everything. The movement has been priced in. When the news drops, who's gonna wanna buy high? Yes, interest rates are bullish for a currency. Yes, the pound has to go up. But who on earth buys high? Markets makers create a market. Hello, buyers. We're first going to sell against you, and then we're going to go buy low. And you already know what the setup is spilling out. So there's a quick reaction to the news. Markets work their way back up, remove the stupid support and resistance lines. And as a 365 trader, I would have just expected you to mark this chart and take your sell there. I mean that's just the game, right? You would have not been in any dumb buys because news event is coming out. You'd have waited for an institutional level to be clearly done, right? All these people stop losses. Everyone who bought here by the support and resistance was taken out. They were taken out. I think that's the big point I want to emphasize. All the retail traders who were stuck here, all their stop losses are here. They were taken out. Market then came back to rally in. We went down with a sell. I mean, I never sold pound USD, but I did see this play out quite well yesterday when I was reviewing the tape, right? So this is a clean lesson. Anyways, teaching quite a lot today. Right, so for pound USD, unless if you're desperate, like I'm not desperate, but if you're desperate for a trade idea, I want you to know that the price has now been overstated. Brother Ronald, yo, good to see you, man. We've got some classic OGs today in the house. How's that NASDAQ treating you, Ronald? Are you still on just purely NASDAQ? Man, you need to talk to me. I'll make time for you, bro. I'll make time for you. We'll do a one-on-one. How's NASDAQ? Good to see you guys. Good to see you guys. You guys prefer afternoons? Seeing some OGs, right? So I'm just going through our 1 hour chat that we normally mark up in the London session. I just want to quickly catch up to see if there's a play. For anyone who is interested in pound USD. Once again, I never take intraday trades in the New York session except for the stock market. Normally Monday to Thursday afternoons, I am heavy in the stock market from about pre-market open by an hour up until about 7 p.m. Currencies, I prefer to trade the London session. The British are not as aggressive as the Americans, right? In terms of competition, I very much like the London session. But anyways, here we are. We're almost there. Okay, and today, how did markets open today? 9 a.m. That's where markets open today in the London session, right? So markets finally broke out of this zone. Right, so markets react to this little trap that they set up yesterday with the exchange rate, sell down, then there's market consolidation throughout the Asian markets. Then London session, as soon as markets open during the London session, markets just drop, right? Drop from this supply. So this was the trade idea yesterday. It was not the buy because interest is going up. It was simply a trade idea, right? So, and in fact, a part of me actually believed that we're going to see a much more stronger pound than we got. This is not real strength. Right? Markets are rather down, creeping in down to a demand. This is not a place to buy. This is not a demand, right? Even if it is, you really have to work so hard to quantify and qualify. And then will you get 1:3? I mean, this is not a good place to buy. Markets could bounce from here, but I wouldn't like it. If you're looking for a buy setup, you're going to have to look a little bit deeper. Let's go to the daily time frame real quick and refresh our memory. For the most part, we are downtrending, right? For the most part, pound USD is downtrending. On the weekly time frame, we have this situation here that looks something like this. This is already in the weekly, right? Markets are just sitting there. And we've spoken about this a couple of times that we should at least personally, because I believe pound USD will follow the Euro USD pattern. Personally, I actually was very happy to see this thing do well. I'd like to see pound actually bounce up a bit for the next 2 weeks or so that we can get a better sell setup here. That will be the long swing all the way down to the March areas of value, right? So it's all the way down somewhere here. So that's what I'm hoping for as a swing trader. As an intraday trader, I have to play these charts according to the time frames zones I'm given. So the intraday trader, markets for the last 3 or 4 days have been showing signs of trend reversal, wanting to go to the upside. Yesterday, markets broke through what would be considered a daily supply. All right, here we are. And now we are slowly but surely making our way up. Markets were then stopped by this little retail trader trap on the H1. Not as clear on the H4 here, but on the H1, I'll show it to you. right? But for the most part, price is a long way to go, right? So we're still playing mind games here, right? So there's still a lot of sell pressure, but for the most part, I think markets overall, right? I'm sure in a week from now we'll be talking something different. Markets right now overall might be egging to go a little bit up, might be egging to go a little bit up. Unfortunately, at the moment, there are no buys for me to take. I don't see myself buying here. Like I said, I don't like the fact that markets came back here and got all the order blocks in this area to push price up and run a strong momentum. And so for me, there isn't a bottom that I can trust right now. On the 1 hour time frame, not interested. We really all should be inside yesterday's sell opportunities, to be honest with you. Mr. Kakama, what's good, man? What do you think about broken areas of value creating opposite areas? Yeah, so Kakama, if I can quickly check for you, just give me 2 seconds. I wrote it down somewhere. Right, so that's actually lecture 17 of module 3. So you'll see that I hate those areas. I know that a lot of supply and demand intraday traders like that. So for in case anyone is wondering what Kakoma is saying is, let's just say price was to break up to the upside, like seriously. So markets were to break out. So let's first do something like this. So let's remove that zone. Let's say price was to break up to the upside, right? What a lot of supply and demand traders will do is they'll do something like this. They will anticipate that this will be a good place for price to kind of like bounce back. And this is really technically you're trading what is known as a retest, right? So this is like a very retestable area, an old school way of looking at supply and demand. And this has and Kakoma, you'll confirm if this is what you mean, right? So if markets are to break the supply becomes a demand, right? And that's how they write it out. That's how they teach it. And my thing is, a supply can never become a demand, but where we can give them their flowers and their credit, the reason why this will work sometimes on the chart is the buy volume that takes out the supply will create an opposing value. For example, I've seen sorry about the crying baby. For example, I've seen a couple of things here in the charts where markets will rally into an area of value like this and start to create PCPs. Just 2 seconds, guys. I'm just gonna quickly quiet down a baby or call someone. Just give me 2 seconds. Just so clear, I'm here. Just a crying baby. Just a crying baby. Right. So I was saying, Mr. Kakoma, you'll see PCPs being put here. All right, PCPs being put there, and then those areas of value will work. Sorry, my partner is doing her best to kind of like get the crying baby, right? But then that might work. But I don't like them. When we back tested this stuff in 2019, and that's how long it's been when I back tested this stuff. I just want you to know, I think there was like a 65% win rate, so that's not bad. In Forex, that is not bad at all. But I don't trade like that. I don't take such trades in general because of this. I prefer clean trades. You'll see Ronald's comment there. He says he's only taking clean stuff now. Man, you followed State down the derivatives. Yeah, yeah. Good money there. And he won't leave. My little brother won't stop trading derivatives. It's actually insane. It's absolutely insane. But yeah, good luck. Right, cool guys. So that's pound USD. I'm sorry about the baby crying and just the joys of working from home sometimes. Right, so this is what this looks like. This is what this looks like right now. So this is pound USD on the 1 hour time frame. I've tightened the area of value, which means kinda that markets haven't really gotten the total of the sell orders. So before I even bother looking for a buy setup, I'd need price to take out such a clean, strong area of value. In fact, I would put my money to selling. I would personally, if the dollar maintains its strength and pound somehow manages to get up here, I would first look to sell. This is a short-term chart. Please don't forget, we're on the 50 minutes time frame. This is nothing. This is not a trade you can just blindly sell and you know wait forever for. It's really, really, really a dangerous place to be. All right, this is a good place to anchor yourself for take profits. A good place to watch out for those. That's pound USD. Right, so I've just spent a lot of time talking and catching up with you guys. We ran out of time here in our 1 hour segment. I'm gonna go for another 15 minutes and I'm gonna call it a day. Yeah, you know, me and Saith once pushed we pushed our $100 accounts on derivatives. You know, derivatives is like a weird emotional mind game, you know. But we got those things up to about 3,000, 4,000. I mean, I was learning about long and range, boom, crash. You know, I still think those things are trash, man. But my little brother loves them. He loves them. He loves them. He loves them. It's just a good place to go sharpen technical skills. I can tell you that. Yeah, right. So USD CAD is interesting right now for me because you know we know for a fact that we've had a down dollar since price hit a supply. So here on USD CAD, when USD CAD turned here, that's when DXY was very much nearing the supply. So one of these weeks, these candlesticks here that made contact with this area of value there, that was when the dollar hit that big supply. And then on the daily time frame, you know, it will probably be somewhere here, somewhere there. Right. So I'm not triggered on USD CAD because I'm stubborn. I really wanted price to really get to this white area here, my white line. And due to, you know, area of competition, you know, unluck, blah, 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 markets came very close, but then went down without me, right? So now markets have gone down, and you can see, you know, the difference is always interesting in currencies, right? Because you can see DXY movement on the daily time frame. It's almost as if dollar dropped for 2 or 3 days, but consolidated just above. And USD CAD actually felt the weight of that drop because once again, dollar right now, whether we like it or not, is sitting inside a supply. All right, a very big supply. I thoroughly believe it will break. I mean, whether markets are already priced in the interest rate, I think in the long run, as soon as markets are done with all other fears, in the long run, we will get an interesting dollar run. Right, normally it takes a couple of 2-3 days, sometimes a week for markets to recalibrate. You have to remember sentiment markets have been going on since probably the 24th, 25th of February, right? Which is quite new to a lot of people trading. Sentiment markets here, I'm referring to the war, how markets have been dealing with the war. But this is what I mean. You see how this movement here on DXY, contact with supply, markets fell for 2 days, went up for 2 days, and then fell properly for 4 days, but didn't break below, didn't create any new lows. And then now are slowly starting to come back. What looked like a bullish engulfing candlestick, you see what I mean? Look at that. It's shrunk already, right? So you have to wait for this to close before you can count it in. But so when we look at USD CAD, we can see a bigger reaction to this contact here. So this is the contact 7th of March into the governing supply. Let's find 7 March, 8 March, somewhere here. Final rally by retail traders, market sold off, right? And this sell off has been more consistent. Here, we've got pretty much a range, a sideways trading. Right, so what I want to do with USD CAD right now is to monitor it. My instincts were to kind of buy it now, and this was probably marked many weeks ago, right? This January area here. Now I'm a little bit on the reserve side of buying it because I need to see what's going to happen with the dollar. If the dollar respects the governing supply, then this buy is not a good idea. You're literally just buying a place where smart money or markets rather will just use you to retest a potential break, right? And all of this is doomed. All of this is doomed, in my humble opinion, right? I would rather get for a better buy trade in the FOMC level from last year, right? Where there was real money put into the dollar, right? When the FOMC decided to say they were going to move to increase the interest rate, right? So this was 16th of June last year. I would be looking to get a swing trade idea going right now. Difficult to sell unless if we get a pullback for intraday traders. Difficult to sell unless we get a pullback for intraday traders. And the reason for that is, this is so long, right? This is such a clean line. The retail traders looking at the M pattern, but you really want to see some swing lows. If I can get a swing low, I can draw a Fibonacci. So the Fibonacci I'm about to draw right now is not accurate. All right. The Fibonacci I'm about to draw right now is not at all accurate, because we haven't gotten a full swing low. That's why it's not accurate. But if we're to get a swing low today or Monday-ish, it would run about somewhere. These areas would offer us a very good place to potentially look for sell setups, right? But the zone is quite big, right? This is crazy. Markets broke the supply, so I'd be very worried. So for me, I can't sell here knowing you went as far up there to take that out, because that means, technically speaking, you actually want to go higher, right? So this is a little bit tricky. I'll leave this zone here just to see if I can get a cleaner area of value on the smaller time frames. But for the most part, that is not a good place to sell, right? That's not going to work, right? So why did markets take out that area? On the 2-hour chart, you can see there was a fresh supply. Intraday traders, this is your job. These are your levels. You have to find where the most money is going to be. This little PCP area right there, just sitting quietly, is what gave birth to the last 2 days of a beautiful, massive sell-off, right? And you would have kind of seen it or not seen it if you just ignored it. On the 1-hour time frame, we've got the same story. So why would I take any other supply if the highest place markets retrace back to is up there? There's really not much I want to do. I could take a risk to retest this area of value. The problem with that is the order block for retest is not this one. This is not a retest type order block, and so we're not going to do that. Please revisit your module ones. Remember, there are rules to each level, right? So it's potentially looking like if I was ever get involved in this market, I'd have to wait for price to come all the way up there for me to sell. I'm not going to sell at the bottom of a leg. I'm not a psychopath. On the 50 minutes time frame, we've got the similar thing, right? Market opening at 3 o'clock. Markets rallied here from the New York session at 9 a.m. Probably opened somewhere here, right? So 9 a.m. price opened here, made a new low. That's what the London session is good for. London session will always create the low of the day or the high of the day. All right, this is very important information, but you'll see I spent so much time breaking that down in your module 3. You'll see it, right? So this was the new low of the day, making sure they are breaking a demand. And then what did the London session do on the 18th of March, which is today? Spent a little bit of time changing character, right? Seeking out a new high, coming back to retest this new low that they've kind of like created. And this is about 12 p.m. today. And by 3 o'clock at the open of the London session, markets were once again at par with a fresh area of value. For intraday traders, you want it fresh. You don't want a retest. You only want it fresh. You want to hit it once. You want to be there, and you want to make sure you've got a good, clean price target. So this is a good trade idea to have taken if you had been watching this market at 9 a.m. Like I said, I'm here just to, I guess I'm going to do reviews today because, again, I never trade currencies Friday, number one, but currencies in the afternoon for intraday stuff, because most of these moves, the clean ones, are done, right? So it'll be up to the US market to then continue this to the downside and create a new lower low, or to stop somewhere here, since London session has kind of like made this the low of the day. It's just something to watch out for. Right, Euro USD. When we look at Euro USD, or am I losing my mind? We drew this zone in the morning, right? So I was teaching on this zone yesterday, right? When I told you guys, I put an X and I say this is not going to work. Wait. Let's go to the intraday chart, because I don't want to say I told you this when I didn't. So let's use the intraday chart. Let's go to the 1 hour time frame, the one that I already marked out. It's on Owanda. There we go. Yes, it's the same zone marked in red. So you guys know red means I don't trust those levels at all. Right, so remember, I did send you guys screen grabs of this yesterday, right? Yesterday I was in a euro buy, so for the most part, this I believe we're going to take it out. I think at about 4 o'clock I did close my trades. at some point in time. Just was one of those wick trades. This long wick triggered me on the 5 minutes time frame. I'll go 15 minutes so you can see it. It was such a clean trade idea that we spoke about in the London session. The line that I just deleted was the breakup structure that we were monitoring yesterday, right? Yesterday. This is yesterday, guys, 17th, right? So we noticed that when markets open at 9 a.m., markets broke structure, and then we're going to come back down where buy one was here, right? My first buy on that red zone. It is red because there was a lower buy there. Buy two, the 0.89, which believe you me was only about 9 pips, right, was there. So markets went in, buy one stop loss outside, buy two stop loss outside here, and markets rallied until about 4 or 5 p.m. When I saw this big red candle inside the zone, that's when I closed and told the group, right? But markets ran and rallied even after me, right? Continued going up and up and up to this zone here. Now we've kind of, it's sad because I'm not in the cell, but we spoke a lot about the zone in the 9 a.m. sessions. This is the same zone that gave us a fantastic sell a couple of weeks ago that I did not trust. I was like, well, I didn't trust the stuff lower than markets right to this 365 candle there, all the way down there. Now, markets yesterday finally gave a good boost run into the zone here again. And so, unfortunately, it's the second time I've missed selling there. Right? I was focused on the buy, and then literally, and I was rushing to walk my dogs. Can you imagine? Can you imagine? And I just sat down for 2 seconds and looked at the charts. I would have left a sell pen in order right there, right? But anyways, price arrived at that sell order yesterday, and in all fairness, wiped out any type of buyers who were left in the markets for intraday traders, and finally went even lower than our buy position. And right now, markets are seemingly trying to be strong. They're strong. I'm going to assume that the dollar is starting to slow down. You look at the time, don't forget, London session, London traders were at lunch. Before, when they were at lunch and it was just New York open, dollar was very strong. We even saw a bullish engulfing candle on the daily. Now it's 2 o'clock. Everyone is kind of like back, right? Look at this. Euro is back up again, which means DXY on the smaller time frames is starting to slow down, right? I don't think I'd have been in this buy. What would I have been buying, right? This is really, for me, nothing that interesting. This is not a level I like. It's not a bullish engulfing. It doesn't give me the imbalance I need, so I wouldn't be in this buy. But I do know we've got cowboys in the house, and cowboys like to take their trades, a little bit risky. Those are the kind of things you want to look out for. The exact same signs that the dollar gave us. The dollar did break structure to the upside. The dollar left a zone lower, right? So just be very careful of this. This to me looks like a game of cat and mouse. If we put DXY here and we go to the same time frame, so for the dollar, we also go to the, what's this, 15 minutes chart on the dollar, we should start to see some opposite. There we go, 15 minutes chart on the dollar. This is the dollar here, right? You see the dollar is dropping. Now we did say we want this thing to drop. We are not in the mood for, where are my zones? I already marked my zones. Sorry, let's just quickly go one view and then go DXY. I really want to see where this thing is going to stop falling, which is where we need to buy. Remember, we marked this together earlier on the 1 hour time frame, right? So we did say not a good idea, right? Remember this, guys? Remember I said option 1, ba, ba, ba. This is like an hour ago. You can see if you took it, you're in trouble. You might be safe by these Talitha areas, but again, for me, never a good idea. Then I said option 2 is what I want to see. So I do want to see the dollar falling down here, right? Strong drop, right? So this is kind of like, it's nice to kind of like review this literally while it's happening. I don't even trust this area because of a lower buy. If you were, not entirely sure about life, then this is what you'll do. You'd have a lower lot size to swallow a bigger area. If the area of your value is too big, you've no choice but reduce the lot size. But if you want to be much more precise and risk appropriately, then you want to just go 5% on an area like that, right? But it's much more safer, not safer, but so you're never left behind to get triggered here, knowing price might drag you down for a while. There you go, liquidated. Anyone who bought here, right? So this is it, guys. Buy low. Yeah, there's an order block. Yeah, whatever. It's inside this, blah, blah, blah. Break, yeah, just buy low. Just follow the universal principles, right? So Dollar is falling on the 15 minutes time frame, so this is euro's chance to take a rise. So I would do the opposite. So what I'm doing is I'm trying to time the reverse, right? I'm trying to time when the dollar will start to buy again, which will also be a perfect time to start selling the euro USD if I was to take a trade. I do not want to take a trade. I'm just doing this for you, right? So on the 1 hour time frame, this will be a good place to start looking for a sell setup, which means you're buying the dollar enough time to fall to a demand so that the dollar can quickly strengthen and the euro might start to drop. Does the euro want to drop? Does the dollar want to go up? These are kind of like questions we're going to have to answer. We saw a strong rally yesterday. We've seen most of that being completely liquidated. We have seen price today on the smaller time frames fail to create a higher high, right? So we can almost assume that markets soon rather than later are going to want to liquidate. The place where you want to sell right now is not the best place in the world. You can try for here and you can also try for up there, right? On the 15 minutes time frame, don't be stingy with money. All right. If no, let me rephrase. If you're going to take the risk, you might as well fully commit to it, right? There's a 50, 40, 45 pip area of value, right? You could divide it in half. You could have 2 sell orders, one there, which means sell order number 1, which will be the highest sell, which is where you want most of your money. You want most of your money risk here, is about 22 pips, right? So you want it something like this. And then because of competition, right, because of the fact that there's a supply even lower, right, you really want to be gracious with your area of competition. So sell 1 idea is 24 pips, right? You guys will let me know how this goes. None of this stuff is something I would want to trade. I'm just letting you know up front, right? And then you want to have maybe sell order 2 here, and the stop loss. It's tricky because remember, you can't put a stop loss on top of a proximal line. You can't put a stop loss on top of an entry point for another area of value, because if you already believe you're going to enter here, then why on earth is your stop loss on top of your entry, right? They're going to hit your stop loss to trigger your entry, which means you're going to lose 5% and then hopefully make it up here, right? So which forces your stop loss for this sell orders, this one right here. The stop loss can't be like this, right? It has to be a little bit into the zone in case markets do something like this. I hope I'm coming across clear. So in case markets do bulldoze and then start to turn inside there, then you're stuck with 2 sell trades going your way type of situation. But yeah, dealer's choice. I'm not really interested in setting into these markets. Please know when to get out, right? This is not a swing setup. I don't see how it could be. Markets will close with you at midnight today and then open and gap against you on Monday because of some war headline, right? So you really want to play around this area. That's where your take profit targets are. And this is if dollar plays ball with you. This is for Euro USD. USDJPY, that's okay with you. We could call it a day, guys, only because of time. And I'm curious to see why on earth my daughter woke up in such a bad mood crying like that. Right, so look at that. What do I keep saying about USDJPY? We've got just simple, guys, simple monetary policy divergence, strong dollar. So you can't see the dollar strength because of the interest rate hike on the DXY chart. And that's because there's a structural supply. But when you think about the strength of a currency, you always compare it with other currencies. When you compare dollar versus dollar by looking at DXY, you'll be like, but I thought the dollar is supposed to be strong. Why is the dollar not strong? Well, look at it now. Look at it now. Safe haven versus safe haven, right? This is a powerful monthly move on the dollar, right? And look at, you see the majority of this candlestick. Let's go to the daily. Let's go recently now. You see, extreme arrow movement non-stop. So this is what Mr. Kakoma is talking about. Mr. Kakoma, this one is better because at least it's an order block that I would trust. It's much better. Those of you are asking me, would I flip a zone supply into demand? I would look at this, but the fact of the matter is markets are too close here. So I'll still prefer to buy low, right? But this is a better zone. So on the 15 minutes time frame, the retest there would be so cool. On the 15 minutes time frame, absolutely. I would understand why anyone would want to take the trade. And I don't think it's this one. It's not this one. I'll wait for this one inside the zone. because this is what really gives birth to the trend. Or if I was an intraday trader, I would ignore everything else, and that's just me. I would have two buy orders here, one, and then the 1 2. This one is your bullish engulfing on the daily. It's the one on top. Oh, you can't see it. Let's do this. Let's go back to 15 minutes. Let's make it red because it's such a small zone. It doesn't really show up. So I'll make it blood red so that we can see it properly on the daily. When I'm talking about a retest, and I'm just going to extend it wide so we can really see it. What? Still can't see it, right? So it's somewhere inside there. I don't know if you can see. If I can extend this there, you'll see it. So somewhere there. So right at the top of your, or just you know how we draw order blocks, right? So right at the top there, that 15-minute zone is what you're looking at. And the other one, the lower demand in that zone is this one there. So I have two buy orders somewhere there. If I was into like taking crazy risks, that's what USDJPY is basically saying to me right now. But for the most part, we've got monetary policy divergence. This is why this is dollar strength. This is literally a good place to come judge the impact of interest rates. My poor dumbass is still waiting down here for a buy trade. Unfortunately, markets are stubborn. I was waiting for the low. I was following my rules, and I don't regret it, right? But markets did create an uptrend and broke out. I was really hoping they'll break to the downside first. But I started to count the zones, right? And, when they start creating these step ladders, then it's almost certain that markets will break to the other side. But then again, these buys were too close to a supply, so I wasn't going to risk it. So I was simply going to wait. But now that markets have shown, proof of theory, then we might have an interesting play for swing traders somewhere here. We might have a very interesting play for swing traders somewhere there. So this Talitha area later on in life could then start to be rewarded as a zone or a moment of strong accumulation, right? It's not the greatest setup, except for the fact that it's a module one buy zone, right? You've got your clean imbalance rule. That's the only thing that this area of value has going for it. And now that we have this order block at the top, we might be slowly but surely starting to break and amend the parabolic structure, which means be careful for retracement to an H4 demand, right? So you might actually, instead of price coming all the way down here on the daily, you might get a buy here. So as a swing trader, those will be my only two buys. 1, 2 as a swing trader. I wouldn't want to buy anywhere, even those 15-minute zones up there. As a swing trader, I would not. Because remember, as a swing, I'm practically contributing to the trend. I'm saying this is a strong place where the trend can continue. And if it's going to be a buy for a retracement, I have to think what retracement means. Is this enough discount for smart money only down here? Or is buying low? Is that a better discount, right? And the answer for me would be yes, that's a better discount. This is definitely a really good discount, right? But again, once again, just final touch on USDJPY. This area of value is literally sitting outside another supply, and its main target is 1-1. After 1-1, things change. Price was supposed to get here in October, just so you know. Price was supposed to get up here in October. It's March, and markets are like probably 1 or 2 candlesticks away, right? So this is just a show of flight to safe haven in its acceleration in price. So just be mindful of that. Right, guys, let's do our index for the day. Dow 30, US 30. Although S&P 500 would have been more interesting, to kind of like look at. That's the monthly time frame. Can I just quickly clean the chart so that when we get to those lower time frames, we're not in trouble? Okay, fine. I'm gonna start making these announcements bit by bit. 365 registered traders. Those of you who are here, please note module 3 and 4 will not be inside the drive, right? So you guys will all get a reminder of your student numbers, a personalized link. and where I'll be hosting all my teaching sites. I've already started uploading the videos there, the lecture series there. So you're definitely getting module 3 this month. Module 4, I'm going to do a live intake, right? Because it's trading psychology. And I really want to make sure we are all together. So I want to do my temperature check. So I'll record module 4 with students who will attend it live. All right. And I think we can get that done first week of April. But right now I want to drop module 3 within the next 12 days. But it won't be in where module 1 and 2 has been. I'm moving everything into a better share service host file, right? So look out for that. And really, guys, take your time with that stuff. You guys asked for it. I took 1,000 trades just back testing that stuff. And while I enjoyed making the money and losing some of the money, for me, it was such an amazing year last year and a little bit this year of just learning more about the markets. Remember, I've never been really an intraday trader. So for me, it was a process of also getting my stuff together. Right. So we've got this action here on the US30. This market has really, fought better than Nasdaq when it comes to falling. It's done a better job than Nasdaq when it came to handling the perils of the war, but not only the war, inflation, and all that kind of stuff. Right. So maybe let me just delete that and do it properly. Right. So since FOMC dropped, increased the interest rates, good for the dollar at 8 p.m. At 8:30, FOMC then he didn't backtrack, but what he did was he massaged stocks, he massaged companies, he made sure there was no fear. He kept saying the job numbers are good. Oh, I ain't worried about inflation. I think we'll be on 4.3 by the end of the year. Even though one of the St. Louis governor, Fed Bullard, keeps saying we need to catch up, bro. We need to be at least by 3%. Look at England, da 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 da. And I think Bullard is right. The problem is no one listens to Bullard because number one, he's extremely aggressive, and he was aggressive when there wasn't a need to be. So Bullard has been aggressive all his life. He was aggressive before COVID, right? The reason why there's inflation now was technically because of COVID. Before that, the states were happy to keep interest rate at 0% because it's a safe haven asset. So look at this. Bullard says Friday thinks the central bank should raise interest rates to equivalent of 12 times this year to convince the public it's serious about fighting inflation. I'm like, my nigga, first of all, you all need to be serious anyway, whether the public believes you or not, right? This is actually a big deal in the markets. This little fight within the Fed is a big deal. A 7 rate hikes would put us to 1.7, right? I did a little calculation for you guys. And I mean, we'll see. We'll see, who's right, who's wrong. As traders, it's not even our country. We just need to make money. But this is a big deal in the markets, right? So US30 and indices in general, we saw Powell just kind of like massage them a bit and say, look, man, well, I'm not worried about the economy. Stocks care about that language. I'm not worried about job numbers. Stocks are companies. They hire people. They care about that language. And because of that sentiment, in the press conference that I streamed live, I'll be streaming most of the FOMC talks live on our channels. You guys seem to have enjoyed that and me explaining stuff, right? We had strong sentiment this week, pricing that in. Finally, Dow making concessions. This is Dow from January this year, by the way, in case you haven't noticed. Look at this thing, breaking lows, making lower lows. So if this run rallies, I'm a believer. I'm not yet a believer right now. On the Dow, if Dow creates a new high like that and a higher low like this, and so from April, I'll come back and check. That should be enough time, right? At the end of the first week of April, Dow should have completed the cycle. That should be enough time because if it doesn't, right? And I don't think we're out of the woods. I don't know why anyone would assume we're out of the woods, unless if the Fed pumps the markets again, right? Unless if the Fed gives us stimulus checks again, because it feels like that's what he wants to do. He stopped it now, but he's not going to be aggressive on interest rates because of uncertainty and the war. In case America needs more cash on hand to go to war. Right. So I'll be looking at this level. I'm not saying it's a good place to sell. I'm saying it's a good place to check. If you are trading it's dangerous to sell right now. Although, you know, historically Fridays are a good day to sell, right? So this could actually work out as a nice money maker, but there's nothing sentiment wise to shake the Dow that I saw personally. You know, the war news for me has just become bland, but this is a good place to look out for. Let's do a final stress test. 347834. So I'm just gonna put in 2 lines, guys. This is the last chart. Unfortunately, I got to go. It's Friday, and I'll see you guys on Sunday. Anyways, I hope you guys enjoyed this. If you did, please don't forget to like, the video. Just give me a second. I'm just trying to figure out something. 35091. So that sounds like 3500. Am I right? Let's find out. Let's just quickly see something. So that's 35100. Let's see if I'm right. Right, yeah, I am right. That's 35500. So how many lines are in here? 2. All right, I don't want you. So let's redo that again. 35100. And this is really for the brave. This is not like a recommendation. I mean, I do not recommend this. As far as I can tell, markets are seemingly strong. 35000 maybe. Let's see what that looks like. There we go. 3500. So hard, man. 34900 maybe. 34900. Let's see what this looks like. There we go. All right, cool. So I've got these 3 levels in here. Interesting. Right, I'm going to go back to normal candlesticks. I'm going to switch to the 2-hour time frames. Let's look for some clarity. All right, so this is your problem if you're going to sell Dow, right? Dow has been to these levels before. Dow has come to 3400 here, right? 34900. Sorry, Dow has come back to 35,000 right there. Dow has come back to 35,100, right? So if me personally, knowing me, and my love for capital, then for me, the first time I would even think of selling this asset is 35200. And again, you know, and so obviously this is a bit tight. So 35225. Like, remember we add 25 to 30 points just for competition, right? I wouldn't bother selling here where price is about to get to, right? This is the markets right now. These levels, I personally would ignore them. That's my humble opinion, but then I could be wrong. But again, you know, I don't know why we would sell, but if we do sell, this is the only place I would attempt to sell. And if I'm attempting to sell here, I'd have to watch carefully this leg. And the reason for that is I need to know exactly where to take profits. Perchance this is simply a Talitha area for buyers where there's a lot of consolidation. Perchance in the 2-hour time frame, by the end of the day today, there will be a good imbalance. Then that's what I'm looking at. The intraday trader, you know, you're not trying to catch the best moves, the greatest moves, the longest moves. You just want to make money today, make money tomorrow, make money again. This is a lot of points in the Dow, by the way, right? So for this sell to really work the way I want it to work, a lot of things have to be wrong in the world Monday, Tuesday. Or midnight tonight. I mean, I don't know if there's even enough money to punch up here, right? So it is a Friday, right? Bearing in mind the last time markets had a demand, just like Nasdaq, right? This is the Nasdaq trade idea of the FOMC, you know, the other night, right? Markets, no, I'm lying. This is not even the other night. This is the 16th of March. Yeah, I'm right. I'm not. Why would I lie? Right, markets removed this demand, right? Yes, they created a bearish engulfing pattern. Yes, they got it retested. This was very aggressive. So markets are on my side up, but very much prepared for anything for the downside. And I would only take that risk somewhere up there, personally. Right, 365 guys, shake my hand. Oh, wait a second. Before you do, look at this. So even if I wanted to sell at 35200, we are in trouble a little bit. Right, so remember 25 to 30 points, you always got to add, and you can see markets did try their level best. Let's just go 35 100, then you'll see what I mean. Markets did try their level best to get involved in the money here. So if I was to increase the size of the order block, since after all it is a doji, It is a doji. You'll see what I mean. You'll see what I mean. Just give me a second. For those of you who are here to learn, I'll just do this just a little bit. Right, there we go. So if we, because that's how we cover our base in candle, right? If it's a doji candle, you want both wicks, blah blah blah, indecision, blah blah blah, right? So you've got this wick here covered inside your area of value, and that's what price came for. So I'll still sell there, but now I'm selling even more cautiously, because I know for a fact that 35,100 was a return to that zone, which is interesting. Was a return to that zone, which is very much interesting in terms of the fact that how many sell orders are waiting for us here. All right, and then you couple that with a couple of trend line throws. You draw a trend line from point A to point B. You will see that markets are right now on a very big path, a war path, to the upside. Just want to see if that is captured correctly. Right, so we've got 1, 2, 3 touches here, fake out, and it's really just a liquidity rate for the higher supply there, taking out stop losses here, markets dropping, creating lows, and then boom, chakalaka. So this is a good place to buy. If markets ever come back down here, yeah, then I'm buying. Then I'm buying, and I'm buying in the hopes of turning this into a swing trade, right? Why? It's actually the demand that broke structure to the upside. Everything else that you're buying now is just pattern trades, right? Pattern trades, continuation trades. And even here is a terrible idea. Although price comes back here, and look at this on the Kinihashi, you have sideways imbalance momentum, which is not always the strongest. So this is a good place for markets to come. Yeah. So if you have a lot of capital, I would have 2 sell orders. Not that I'm telling you to sell. If I was selling, I'd have 2 sell orders. One, take profit definitely here. The second one, break even in the hopes for a good old-fashioned breakdown. Good old-fashioned breakdown to this level. That's what I would do. That's what I would do if I had a lot of capital to take a risk on, right? But for the most part, price's target point seems to be preset on getting back to one of these upper levels. So I would definitely look out for that. But yeah, guys, thank you so much for tuning in. I appreciate you. See you on Sunday for those of you who we shall see on Sunday, and then see you Monday next week for London sessions. Let me know in the public Telegram group if you want to split the week up. So if you want London session Monday, Tuesday New York, Wednesday London, something like that, you'll let me know in the public Telegram group, and then I'll double check with my schedule, and if I can make it happen, I will. I do share 3 times a week, with senior traders already in the New York session. So we'll see what dates I can move around for this kind of stuff. Right. Cheers. God bless everybody. Take care. Good to see some of you, all of you actually. Very good to see all of you. All right. Bye, everybody. Bye-bye.